Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest, but I haven't had him on in a very long time. He's been covering gold and gold mining stocks for many years as a paid newsletter writer. He is the founder and editor over at the Gold Advisor, covering junior mining stocks. He also has a long family history of being in the mining business. So to get his insights now with the gold price at over $3,300 on Thursday, April 24th, 2025, Jeff Clark, thank you for joining me again.
Jason, thanks for having me. And sorry it's taken so long for us to connect up here, but it's great to be back with you, man.
Well, I mean, getting you on as a contrarian, right? When the gold stocks were in the pits, it just probably wouldn't have gotten many views. But now I think the sector is starting to kind of percolate and get excited. And we'll talk about this in a little bit later. I think finally we're going to start to see some of those pension funds, institutional investors that would have never bought gold or gold stocks start to allocate some serious amounts of capital to the sector. And I think that's going to benefit a lot of the companies that you cover.
Absolutely. And I think some are, but I think the big wave is just getting started.
Now, we just had Newmont Mining announce earnings, I think, yesterday on Wednesday, April 23rd, 2025. I think they beat in a huge, huge way, free cash flow and stuff. You've been in the industry a long time covering these companies, also worked in the mining industry. What do you think these producing gold miners, so the senior miners like Newmont, Barrick Gold, Agnico Eagle, and the mid-tier miners, what are they going to do with this robust amount of free cash flow now?
That's a great question, and it's a relevant question because they are sitting on huge, their earnings have jumped by double and triple digits. Free cash flow has dumped by double and triple percentage gains over year over year. And that has almost solely to do with the gold price, the higher gold price. There was some M&A in there, but mostly because of the higher gold price. So they're generating enormous amounts of cash flow right now. There's a lot of green on the screen, as we say, that the mainstream and Wall Street guys can look at and see if they're going to look around like, hey, the S&P is not performing well, Apple's not the darling it used to be, whatever, and they start looking around, they're going to see a lot of green on the screen for us. But there's another issue as well, because a lot of us in the junior sector were wondering, why the heck are these producers not buying the juniors when they're so cheap? I mean, they could buy 4 or 5 juniors, last year for what they could have bought one 4 or 5 years ago. So why aren't they jumping all over them? Well, one reason was they wanted to have bigger cash flow. They have that now. The other thing is, remember how high the debt levels were. And Jason, you were around then back in like 08, 09, 10, 11, 12. 10, 15 years ago, the debt levels of these companies were very high. It was irresponsibly high. Now those debt levels have come down. In fact, I saw one report, I believe it was from Bloomberg, but I don't recall. Net debt for the producers in the mining industry for 2025 is going to be zero. Zero. That's amazing for where they were 10, 15 years ago. Now that's EBITDA divided by debt, so net debt, and it's going to be around zero. So they have greater cash flow and they have low or no debt. This opens the floodgates for them to start spending money, because we all know that exploration spending has been down, discoveries have been down. They're going to need to replace ounces. We've all known this for a while, right? Now they have the means to capitalize on that and begin to move forward in acquiring assets. So I think M&A is a theme that's going to pick up here in 2025 and last throughout the bull market, frankly. So I think we're going to see some fun times ahead, especially for those of us that own juniors.
And to add to your points there, I mean, in terms of profit margins, I mean, energy prices with the oil price being in a trading range at the bottom end of a trading range. So energy prices are trending downward. We're not seeing input cost pressure yet. So the profit margin should still be robust, at least for Q2, probably Q3, unless we get a rally in the energy prices or some type of government royalty tax on a higher metals price. But we're not really seeing that yet. And this is probably the only industry, Jeff. I know you don't track the other industries, but I really don't see the other industries that have free cash flow growth. So the gold miners are kind of in a sweet spot where they're one of the only industries for hedge funds, pension funds, institutional investors that would have never bought gold or gold stocks, and they actually are looking on their screens, and it's like the only industry with free cash flow growth compared to a lot of the other industries in the S&P 500.
That's a great point. Yes. And I think that's exactly what's happening. They're going to start looking around and seeing that. By the way, the all-in sustaining cost average for the industry was $1,451 last quarter. Um, it's up, costs are up 50% since 2019 for the miners. 50%. But the gold price is up 200%, even more than that now. So even though costs are up substantially, the gold price has risen a lot more. And so that's why free cash flow and earnings are a lot higher and they're able to pay down debt. They're going to start to be able to buy companies. I think this is going to be a theme, and I think that's one reason why is because of the higher gold price.
Now, for a producing gold miner that has low cost, one of the lowest cost producers like Agnico Eagle, they have to allocate a lot, right, for maintaining property, plant, equipment. It's called maintenance capital expenditure, maintenance capex, to maintain what that massive mine, Canadian Malartic. But now they could also start to look at investing into juniors. How do you think the industry for the senior gold miners and the mid tiers, are they going to copy like what Agnico Eagle is doing by investing in private placements with juniors that are close to their main mine, like Canadian Malartic?
Yeah, I think so. I will say Agnico Eagle, as far as I'm concerned, is the leading gold producer in our industry. And I don't mean to offend anybody else that might be listening, but I think a lot of people agree that they're the leading gold producer in our sector. I really like them. Very well run. They're conservative. They don't make a lot of, messy or high risk bets. So I like them. Maybe Newmont second for the big companies, for the seniors. And I do. So I do think if my assessment is correct, I think a lot of other companies are looking around and watching what Agnico is doing and are going to want to follow their lead. Because if Agnico's doing it and they're a conservative company, then we should be doing it too. Um, so I think that is going to be something that we're going to see. It's going to be a theme that's going to play out.
So Agnico isn't buying most of these companies immediately, right? So they're buying what, 20, 30% equity in the companies with the option to buy more, and then they're funding the drill programs, or are they actually going and buying the juniors outright?
So they're making either a strategic investment, right, where they just buy it like you and I would buy it as an investor, and they may, want to keep it under 10%, or they may go up to 20%, whatever. With the juniors, it's easy to get above 10%, right, and be a reporting issuer. But or they could do some kind of joint venture. They could do some kind of earn in. Or, of course, they could buy the company outright. Now, they're going to buy the company outright. I think it has to be a very attractive target for them, which means it's going to have to be, like I always say, like my grandma's chocolate chip cookies. It's going to have to be big and rich. It's going to have to be a big asset that can produce, bare minimum 100,000 ounces of gold a year, but they'd rather have 500,000 ounces of gold a year coming out of the thing if they could find it. But it's going to have to be something that's substantial. It can't be something that's producing 30,000 ounces a year. And it's got to be rich. It's got to be high grade. It's got to have, and maybe even more than high grade, it has that very strong economics. So it may not be the highest grade asset in the world, but if the economics are really strong, meaning the costs are lower because they've got infrastructure in place, permitting's already set up, the development's mostly done, permitting's mostly done. All those things are put in place. That's going to make it very attractive for them to just purchase it outright. And hey, that's what we're all looking for as investors is who are those really prime targets out there? And I think that's what you look for. An asset in a pro-mining jurisdiction that's big and rich and has some strong people behind it that have already pushed it, if not all the way through development, a good portion of the way through development, so that they're very attractive.
Is that why exploration geologists, is that why they start looking for potential new resource or reserves around a producing mine? Say, like, because Agnico Eagle owns two of the best, low cost, safest producing mines in the world in Canadian Malartic and Detour Lake. So you think then exploration geologists are targeting around those mines more than necessarily going out there for greenfields?
Well, I think a lot don't want to focus on a greenfield. It's true. Now, there are the exceptions, the big one, the obvious one being Snowline Gold. That was I got to tell you, Jason, that was an awfully fun ride. I think we're up like 21x on that thing or something now, um, but that's the exception. Let's be honest. So, the rule is they're going to look at something that's, probably a brownfields project, which is what most geologists are going to look at. That's a little bit easier in terms of proving up an asset. It's a little easier in terms of finding more gold. It's probably easier to permit. So it's got infrastructure in place. So it has a lot of things going for it when you look at a brownfields project. So I think that is what not only Agnico is going to be looking for, but also these other producers that are needing to acquire assets.
Now, I want to transition to geopolitical risk because it's something with the that mining specifically has, I would argue, more than pretty much every other sector. Because once the mining company makes an enormous investment, $500 million or more into building a mine, they can't move the mine. So I want to get your
Right.
thought. Yeah. So I want to get your thoughts on like what's happened with Barrick Gold in Mali, Cobre Panama with the that was a large copper and gold mine that hurt with the copper miner First Quantum, and then the royalty and streaming company Franco Nevada. Are there countries like Panama or Mali in West Africa that you think that investors should avoid right now?
I used to invest, a reasonable amount of my capital was going into companies in West Africa. It's highly prolific. There's a lot of infrastructure there. You can drill year round. There's a lot of advantages, but all of that has really come under the gun because of and solely due to politics. And I just hate that. I hate that politics and geopolitical turmoil can dictate how your investment goes. And for that reason, that's why you must screen for political jurisdiction. You must screen for politics. A lot of West Africa I've really shied away from. Jason, where's Nucor Gold located? What's the country that's in?
Can't remember off the top of my head. I don't cover as many juniors as you do. I actually cover hardly any juniors these days. I mean, I cover mostly royalty and streaming companies, and then I cover like the senior gold miners and the mid-tier gold miners, and I look to see like where their strategic like private placements are going or something, or if they're all allocating, let's say, to a specific country like Ecuador or Argentina.
Yeah, the reason I bring them up is because that country might be the exception to the rule. Most of the countries in West Africa, I'm sad to say, I probably wouldn't invest in right now. They're in Ghana. So, and I'm not trying to spotlight them or anything, but my point is that most of West Africa, you know, uh, some would say deservedly so, has become an investable just because of politics and geopolitics. And so, to be honest, I've steered away from it. I like Nucor Gold, but I'm just really gun shy to go into Ghana, which is very pro mining, by the way. There's a lot of big assets there, but I'm just gun shy to go there right now until West Africa really calms down. Um, that's one I probably wouldn't invest in right now, but I hope to someday, right? I hope things turn around. I hope they stabilize, and then I'll start taking a look at them again. Obviously, there's a lot of jurisdictions in Canada that I would like. It has gotten harder in BC, but uh, you know, and then of course Nevada. I don't have any assets in or investments in Panama. I do like Argentina and Chile are kind of coming around, even though there's some, and Brazil too, by the way. Colombia, even though there's some left-leaning politicians that are the presidents of those countries, they still have pro-mining policies in place. And I've had some good luck with some of the companies down there. Some haven't moved yet. I think they still potentially could. But those are jurisdictions that maybe aren't at the top of the list, but they're on the list. Let's put it that way. And then I'm not in anywhere in China or Russia.
Yeah, I think China and Russia right now with the US sanctions and stuff like that. I mean, for foreign direct investment, US companies, US investors are not going to treat those investors or foreign companies very well right now. Although I am cautiously optimistic, I think, Jeff, about Mongolia right now because Mongolia has gotten way out of favor, but Rio Tinto just or is about to finish the Oyu Tolgoi, the underground copper and gold mine, and there's other investments into there. There's other copper and gold mines coming online. I think people have kind of forgotten about the mining climate in Mongolia, which is next to China.
I forgot Mongolia. Thanks for bringing that up. I like Mongolia actually, but I'm selective there still. I'm still looking at the company and the relationship they have with the locals and the government, how far along their permitting is. A good example there would be Erdene Resources. Boy, that stock has really been a strong flyer for us, and that's because they're connected both with the government and the largest mining company in the country. So there are exceptions even within these countries we're talking about.
Exactly, and Erdene is something that Sandstorm Gold has a small royalty on. I think they're copper and gold mine, their first one, because it looks like there's going to be potentially multiple mines there as they start to reinvest the free cash flow.
That's right. That's exactly right. There's some very that could be a very big asset someday.
Yeah, so they're building for our listeners out there, they're building a small mine at first, and I think that's supposed to be online, I think by Q3 or Q4 of this year. So that's already funded. The Erdene, which was a junior, to try to limit share dilution, they partnered, like Jeff said, with I think the largest coal miner in Mongolia that's looking to diversify into what copper and gold. So it's kind of a win-win joint venture partnership because the mining company in Mongolia is going to have going to be able to navigate the political landscape better, and they're going to provide a lot of the capital. So the junior doesn't have to bet the whole company, taking out a lot of debt like a lot of juniors would normally.
Yeah, you described it perfectly.
It's we can have a good conversation here because like I'm familiar, with the financing with royalty and streaming companies and the juniors. So it looks like a lot of the juniors have kind of gotten smarter here instead of gambling the whole company because the risk is what that you end up with Argonaut Gold and Mangino, right? Where you go all in on the one mine, you build out this massive mine, you get into financial problems, the mine doesn't come in on time and on budget, and then what the competitor next door, what is it? Alamos Gold ends up with the asset for pennies on the dollar while the junior did all the hard work.
Right, right, right. Yeah, let's hope some of the stocks of the juniors start to, and some have, by the way. We've had some doubles and triples. You probably have too, but some of the stocks have started to move, but many have not. So let's hope they do too first before, these companies come knocking on the door. That's my biggest fear is you get a company that's deeply undervalued and we're underwater on it, and somebody comes along and buys it, and they give us a 35% premium, but when you're down 75%, that doesn't get you back to even. So
Didn't that happen with Equinox Gold and there's fights over whether or not that transaction is going to go through?
yeah, good question. I haven't followed that story real recently. I know it hasn't gone through yet, but that might be the case. Yeah.
I want to ask you about Argentina because Malay's been there for almost 2 full years now. He put in, I think, a foreign direct investment, a tax break, and some other conditions there that if I think a mining company invests $500 million or more by the end of 2026, they get a huge tax break. They get currency advantages. Do you think that this is going to help accelerate what these copper and gold projects, because there's a lot of them in Argentina?
Yes, that's exactly right. There are a lot of copper and gold assets in Argentina. It's a very rich district. It has not been mined out. There's a lot of potentials there still. I think he recognizes that mining is a significant contributor to the country's revenue. So I think he's doing a lot of good things when like that, for example. I think that there are a lot of companies that will be in a position to take advantage of that. I think that is the trend. And thank goodness it should be because, these most mining companies are actually, responsible. They're not, you know, uh, deadening the environment and destroying it and all these things. Now, there are exceptions to that, and some of them are in South America, unfortunately, or in Africa. So you have to be cognizant of that. But for the most part, most companies are responsible. And so, therefore, when you can combine responsibility with some economic incentive, everybody can benefit. The locals can benefit from the jobs. The company can benefit by actually being able to build a mine and produce. The country benefits by getting revenue. It can be a win-win-win.
Yeah, I totally agree. And for our listeners out there, there's an old documentary over 10 years old called Mind Your Own Business, where they interview the locals at a potential new mine, a large one. And the locals, they want infrastructure investment. They want higher paying jobs. They want electricity, clean water. The mining company, for them to produce a profit, I mean, they normally have to invest in this type of infrastructure around the mine, right? So they have to
That's
invest in
right.
yeah, so the local town's going to benefit with higher paying jobs. There's going to be extra electricity and clean water because the mine needs all these things to run smoothly, or there's not a profit at the mine. So they have to build out the town around the mine too.
That's right. Yeah, and a lot of money companies do that. They want to work with the locals and provide those kinds of things, and the responsible mining companies do that. So there's a lot to finding a winning mining investment, but when you see that, it kind of gives you a signal that, pardon me, that you've got a very responsible management team in place, and that's exactly what you're looking for because that translates into other things and how they do business. So that's one of many things, but it's one thing you're looking for, and it's a good clue you're onto a good management team.
Are we at the point in the cycle now with the high metals prices, or maybe they haven't been high enough yet, where some of these juniors, Jeff, can go out and say they need 200 to $500 million, and a Wall Street investment bank or Canadian investment bank, a pension fund, a large institutional investor will contribute, say, they'll all split up the capital and they'll fund the gold mine themselves, or are we not at that point in the cycle yet?
That's a good question. I think we're getting there. That would be my off the top of my head answer to that question without researching it. I think as gold continues to go, and then once the juniors en masse begin to move up, we're going to see that pick up steam. But I think that's coming. We saw that back at the peak in 2011. Certainly saw that back in 2008 in different forms. But uh, I think that's ahead for us, and that would be a very good sign. And you want to be invested before that. You don't want to wait till that happens because a lot of the momentum will already be running by then.
And there's something called the Lassonde curve too. So if the junior gets the funding, the shares could pop, but then after a certain amount of time, people sell off the stock. So the stock could drop down. So there's a Lassonde curve for our listeners out there. Do you target the Lassonde curve with your investments on timing?
Well, sort of. I do like the sweet spot stocks, I call them, the pre-producers, those that have declared a construction decision. If you buy on a construction decision announcement and then you look to sell or at least take profits at first pour, that's roughly on average about an 18-month period of time. And on average, stocks typically rise 90 to 100% more in a strong bull market. That's one of the most reliable predictors of investing in what is really a highly risky sector, right? I still like pre-discovery plays, though. We have many of those in our portfolio. When a company makes a discovery, boy, that can really be fun. Like the Snowline I mentioned, Amark Resources up in BC, the copper discovery they had, or copper gold, I should say. That's what I'm looking for. And that's at the very early stages of the Lassonde curve, right? Where I really don't invest is at the very beginning of development for something that's going to take 5 years to put into production or 10. That's a long, drawn out, boring process. And the stocks rarely move during that period of time. So, that's the one phase I probably don't invest in.
And you think it depends on which country, then how long it takes from a mine for the capital raise to construction for it to go into production? Because some of these mines, the permitting for some of these countries, for permitting mine, what the permitting process could take many, many years, whereas other countries, it could be done in what, under 2 years?
Well, that's a good point. Yes, all countries and even jurisdictions within countries are going to have different rules and different timelines and things like that. What I'm really hoping for, Jason, and this is not a political comment, but if Trump really does push a lot of things forward, like he's insisting that he will, if he's insisting permitting becomes easier and quicker and more efficient, there's some spillover of that into some of the Canadian provinces we've already seen. If that really materializes and hey, we can cut our permitting timelines, down in general by 20, 30%, or maybe even 50% in some cases, that benefits all of us. As long as it's done responsibly, that benefits all of us, the mining company, the investor, the country itself. I'm hoping that that's a trend that's not just a fad, but actually becomes more of a permanent, long-term trend.
Yeah, I totally agree. And in the US, I mean, the US has lots of good copper and gold projects in Nevada, Arizona, Montana, some of those other upper Midwestern states. I mean, there's tons of potential mines in California, although I think I'm not optimistic about getting permitting and building mines in California.
Yeah, I live in California and I'm not invested in anything in California. So, and I even have some friends that, are invested in a mine not far from where I live. And I just can't do it. I wish them well, but it's not where I'm going to put my dollars.
Well, it's really sad considering California's long history with the gold rushes and mine discovery.
Yeah. And my dad was a gold prospector here. This is where he kind of cut his teeth. And then he had mining claims here, but then he branched out to Arizona and Nevada. I think he went a little bit into Oregon, not as much. So yeah, he kind of, in a sense, got chased out of California because the rules kept getting more and more and more onerous, and so he just eventually gave up on it. So, and that was just prospecting. That wasn't even mining. So that tells you how strict it really is here.
Okay, last question since you have a time constraint for today, and we'll definitely have you back on. I want to get your thoughts on some of these pension funds, institutional investors, generalist money managers that would have normally never bought gold and gold stocks. Are they starting to reach out to you and say, I want to have a conference call with you. I want you to help me do research, do extensive due diligence in some of these junior mine stocks. We want to start allocating more exposure to our overall portfolio of gold and gold stocks.
Well, I haven't had them reach out to me personally, but I know we do have subscribers that are, we definitely have many high net worth investors. And I think some fund managers and institutions are subscribers. I think they are increasing as well. Our numbers are going up, as probably most newsletter writers are, mostly because of the gold price. I'd like to say it's because of me or what I'm doing, but I mean, let's be honest, the gold price is attracting a lot more people to the market, to this sector. So yeah, I think that's kind of ties back into your earlier question about them coming into the sector. And I think we're going to see more and more of that as we go along. I think we're still at the beginning, even though gold has had almost a sort of a mini parabolic run, Jason. I think we're still at the beginning of this. I think there's a long way to go. Think about it. We've had this run in the gold price, and yet most of the stocks, many of the stocks, have not really moved all that much yet. There's been some fun exceptions, but as a group, they haven't really moved yet. So that's still all ahead of us. And that tells me that the next run could really be a lot of fun. Recession aside, stock market crash aside, crisis aside, all those things aside, I still think we're going to see a lot of fun days ahead for the juniors if you've got a 2 to 3 year mindset.
Yeah, I totally agree about the divergence or discrepancy between the valuation on gold stocks, juniors, producing gold miners, and the gold price, because we've had this huge move in the gold price. But I'm looking at the GDX, that's the gold miners ETF, the largest, the most liquid one. That's still around just under $50. That's way off the all-time highs in 2011. The GDXJ is even worse. I think it was $160 back in 2011. It's at $62.26 right now. That's the Junior Gold Miners ETF. So we have a lot of run room. These companies, if they produce the free cash flow, the profit margins, if they don't do bad acquisitions or dilute their shareholders, I think these companies could be in a sweet spot, like you said, for the next couple of years.
In 2011, that run from '08 to 11, it started out as a safe haven run, but the stocks immediately responded. In fact, the bottom in stocks that year was Halloween Day in 2008, and they really ran from there. But it started out as a fear thing, but then it turned into a greed thing. Well, we kind of have a maybe call it an uncertainty, thing going on right now in the market, and that's what's pushing people into gold. We haven't seen them move into the juniors or the stocks in general yet. So I think that's going to come, and once the uncertainty kind of clears out, we'll get into the greed phase of it, and that will probably be a lot of fun.
Yeah, I totally agree. And I want to thank you so much for your time today, Jeff. If my listeners want to check out your mining stock book or your newsletter, how did they do so?
It's pretty easy. It all falls under thegoldadvisor.com. That's the umbrella. We have free newsletters. We have paid newsletters. We have ones that focus on gold. We have Peter Kraut that came over when we acquired Gwen Preston's newsletter business. He does silver. We both have books. We have a premium service. So we have a new website. We're really rocking and rolling. We're ready to really capitalize on this thing. And I will tell you that I am bound and determined to make my personal portfolio really work in this gold bull run. And that's where our my investments are in our newsletters, the free one and in the paid one. It's our personal portfolios. It's over the shoulder look, and so that's where our money's going. So hopefully, I think we're going to be right. But if not, Jason, maybe you got a couch I can sleep on.
And you're not a Johnny come lately. You've been covering gold mining stocks, I think, for 15 years. You were at Casey Research, you were at Well Cycles. You've been doing this a very long time through the bear market too, when no one even wanted to hear the phrase gold stocks.
Yeah, exactly. And I will, that's a good thing way to end this because this market cycles. If you look back at, I just look back at my short career, and I joined Casey in 2007, I believe it was. There's been several cycles in between then. And so if you look at that and you realize, okay, we're near the bottom of a cycle, and that's a great time to invest. We're definitely near the bottom of a cycle for the gold stocks. Gold has started to run. It's not near its ultimate top, in my opinion, but the gold stocks have not. And so we're still at the bottom of a cycle. So this is a great time, in my opinion, to be investing. And I am. I'm putting my money where my mouth is. I'm not just saying that to sell newsletters or whatever. This is my money. It's where it's going. And people can join along for the ride if they want. And I think it's going to be potentially a lot of fun over the next few years.